It's Ed, and the future is now, and the future is time. Okay? Time horizons in the market, especially Tesla. And the reason I'm covering Tesla is because a lot of people that follow the channel follow me because of Tesla. So I'm going to explain Tesla, explain the chart. Okay? This stuff is super obvious to me, and I want to share it with people because I'm getting the feeling that people aren't understanding what's really going on with Tesla and what's going on with the market. Okay, and a big part of it is time, meaning the time horizon that you have. Okay, I mean, are you a short-term trader, day trader? Are you a mid-term, like, you invest in a stock for maybe a month or 2 or 3 months, and then you try to find another stock or whatever? Are you a long-term investor? Okay, these are all three separate things, three separate type of traders or investors that move the markets, and that's why the market chart looks the way it does, because it has a diversity of actual people that are trading or investing in different fashions. Now, I have four lines on here, okay, that are obvious: the blue, the green, the light pink, and the red. Okay, now the blue is the 20-day simple moving average. These moving averages, by the way, are enormous when it comes to supports and resistances for stocks, first of all. But I want to explain them so you understand what happens when it breaks above or below these certain things, what it really means. Okay, so the blue would be the simple moving average 20 period. Okay, so this is a daily chart, so that'd be 20 days. Okay, so if it's a 20-day period, that's a very short time frame, short time horizon. 20 days, it's not even a month. And then you have the 50-day, okay, which is in green, okay, which is a more common one that most of the market uses. Okay, the 20-day, I would say, is a trader, a more of a trader mark to be following. If you are a day trader or a very short-term trader, the 20-day is probably what you need to be looking at. And if you're more of a mid-term trader, maybe for a couple months you're going to buy this stock for 2 or 3 months or whatever, then you need to be following that 50-day. Okay, and then the pink one is essentially the 100-day. Okay, which is it's more mid-term to long-term. 100 days, that's 3 months, a little bit over 3 months, right? And then you have the 200-day, which is massive. Okay, that's almost a year. This is for long-term investors. Okay, so you have to understand, depending on what you're going to use, is depending on what you're trading the stock. See, I trade Tesla, I day trade, but I also invest long term. So I'm literally looking at, and I also swing trade it. So I'm looking at the 20, I'm looking at the 50, and I'm looking at the 200. Well, if you're not day trading and you're just investing, you should be following the 200 and the 100-day moving average really closely. Okay, if we're above those marks, that's solid. You can see with Tesla, we just cracked the 20-day. Okay, not just 2 days ago. Okay, so we cracked the 20, and we're basically touching right now. Basically, going to be touching or cracking the 50. Okay, so for those midterm, couple month type of traders, if we crack that 50, and you don't want to wait around for months potentially where it could go down to 288 or whatever, and when it can go down to the 100-day and bounce. See, it could bounce off of these. You can see, let's actually look at the 20. Let's just to start with, so you can understand. Okay, and then at the end I'll explain what we did over this time period. Okay, so it'll make sense, and so I can show you why I use these moving averages are enormous, right? So anyway, it cracked the 20-day, just past the beginning of the actual sell-off, first major sell-off early in late February. Okay, we all know what that's about. Okay, and then it bounces up to the 20, notice, and it rejects it. So it rejects it, and it comes down and down all the way down to, well, it actually went basically through the 50, bounces hits the 50, rejects the 50, and down. Oh, big surprise! It touches the 100, but then gaps down below the 100-day and comes down and actually pierces, which is, when I say pierce, it means it's basically just cracking below the 200-day, and then you can see an enormous green bar of selling or buying back, and this is a snapback. Okay, so it snapped back huge, and let's see where it hit from there. It comes back to the 20. What did it do? Literally is almost touching the 20, almost touching the 20. So it's basically just grazing the 20, down lower, grazing the 20, finally breaks it. Okay, and when it crosses, you can see the 20 and the 100-day cross here. When it crosses this is a good buying spot again. You can say, oh, why didn't you just buy down here at the bottom? Well, you don't really know it's the bottom at the time. You know that the 200 is going to be huge support, but in general, you don't know, for certain how far it could go. Well below 200-day moving averages, stocks can easily. But anyway, so when we crossed above it, that was a good buying spot. You can see it ramp up. Okay. And, then it was consolidating, bouncing the 20, bouncing the 20, bouncing the 20, bouncing the 20 a bunch of times. And then it kicks up a little bit, bounces the 20, bounces the 20, and then has a huge run up and bounces the 20. So you can see 1, 2, 3, 4 major spots, and then it bounces the 20 here. This is a trader exit spot again. So traders were trying to, get out and save those losses. Once it bounces back above the 20, traders are back in, hopping in, and it flew up into the split. Okay, so and then it cracks the 20, bounces the 50. Notice right on the 50, and it bounces up. These are this massive supports for any stock or moving averages. Okay, 20, 50, 100, and 200. And I suggest if you're just tracking one stock, you track these 4 moving averages because they are points to buy more or points to get out trim positions or whatever. Okay. And then you can see now we're in a situation where it's touching the 50. So it could skip the 50 and head back up. But if it does crack the 50, then we're probably heading down, to maybe test like we did over here. We could be coming down to test the 100, or maybe even test the 200. The 200 is really far away. I mean, I'm not saying we can't come down and test the 200. Okay, so that goes over basically those moving averages. Okay, and it's very important. Depending on your time, everybody's like, oh, you shouldn't sell Tesla. You shouldn't buy. It all depends on the time. Okay, this isn't about some emotional standpoint of, where you think the company. I'm super bullish on Tesla, but it doesn't mean that I have to lose money every time the stock goes down. Okay? I hope that makes sense to people. I didn't lose any money going down from here where we sold. I lost 0 money going down all the way to that bottom. I didn't lose anything. 0, nothing. Why? Because as a trader, I was like, wow, we cracked the 50 or the 20. I'm out of Dodge. Let's just be patient and wait. I'm good at just waiting, and I can wait and see. Let's see what happens. It kicks back up, and I'm FOMOing a little. I'm like, oh my gosh, maybe it's going to pop. And I'm waiting for it to break higher, and it didn't. So I didn't buy in. So it kept going down. And I was just trading as it was going down, trading, making money on a day trade. Very short period of time. Okay. So, and then when it did crack the 20 going up, the 100 going up, that's when I started adding in. I missed some bars here and there, and I missed some pops up, but I'm perfectly fine with that. I'm perfectly fine with missing the market moves up, but I'm really good about missing the moves down. Okay, so that's really key. I like to maintain that, and that's why our chart pretty much just goes steadily up, because I'm missing a lot of those big down cycles in the market. So yeah, I don't capitalize 100% on the entire gain going up, but I also don't take those those hits going down. So, there's a little balance there. Like I used the short-term mentality with the long-term view of, Tesla's the stock that I want to be trading. Tesla moves heavy, and it's a company that I know is going to move up over time. So if I did get trapped in it, and in a bad play or a bad situation, I'm not worried about it long term, you know. So I justify it that way, meaning even if I do make a mistake, then and I'm stuck in some shares, I'm not too worried about it, So I hope that that kind of makes some sense. So you want to be in, I mean, in my opinion, I mean, I like investing in or trading in a stock that I'm investing in as well, because worst case scenario, you're just still investing in that company. You know, best case scenario, you actually can sell off high and buy more shares lower. Okay. So anyway, so I wanted to go over that, and that's super important, So we made money going up. I mean, for example, when we bought pre-split, back even before the chart. I don't want to pull it up to mess with the chart, but we bought in pre-split way back, September, around September 11th, September 10th, I believe, of 2019, right? So about a year, and then we just put in about 5,000 in, and we ran it up, and we made about 40,000 profit on the first run up. Okay. And then we actually made another 20. So we made about 60 or 70. I can't remember exactly. I really don't care. It's not about making the money. It's about making the right decisions all the time. The money will follow if you keep making good decisions in the market. Okay. And then we held off and we ran it up and made another like 60 or 70,000 on this run up, going from all the way up to basically all the way up near the split. And I got actually stuck in it. I got stuck in it at the split. Okay. Meaning, I mean, I still had shares up here, a decent amount of shares. And then when it came down, I was looking at the chart and I'm like, okay, well, we're still above the 50. Okay. And, should I sell now or should I actually cost average down? So, and I was like, okay, it depends. Is the market cracking? Meaning, is the whole market turning over, or is Tesla turning over? And the answer was no. So I knew that it was a buy the dip scenario, and we were going into the buy the hype, sell the news battery day scenario. Okay, which is up here. So I bought in, and the last buy I made on that run was 350. And I'm actually mad at myself because it was down in pre-market to 310. And I wanted to snatch it because I knew it was like a Pierce situation. And I was like, oh man. And I just like, okay, well, it'll be at 300 by that morning, but it wasn't. So I didn't have that opportunity to add a little bit more. I mean, I could have made an extra 5,000 on this run up, but didn't. Okay. And anyway, so I understand the buy the hype, sell the news mindset. Okay. And I'm going to explain it a couple times on this chart so you guys will see it. I have people, I mean, we're asking me about Tesla, like they bought it like the day before battery day, and I'm like, ugh. I'm like, not really thinking that you don't want to buy it on the kind of the last day of that cycle of buy the hype, sell the news scenario. So, but anyway, I mean, I'm not saying that the battery day couldn't have completely wowed the entire planet, and the market in Tesla couldn't have driven the market and driven Tesla up. I mean, that's definitely possible, but for the most part, it's a percentage game, sorry, where I would say it's about 70% chance that it's going to sell the news versus maybe a 30% chance that it'll push higher. Okay, because it's already pushed up. It pushed up a lot into that day. So to push up higher, it really has to outperform what the market's thinking about that event, like the split. So let's go over some buy the hype, sell the news scenarios. Okay, we know the last one, which is battery day. I was out at 444 right here. Okay, pretty high on the chart. And we ran up. We ran up about 50,000 in this run up, almost to the nose again, like 51,000 or something, from 215 to 266 or something like that. So we ran it up about 50,000 for those shares. I had 512 shares running up. And then I was going to trim, or I was going to close the position depending. And so I was leaning on the buy the hype, sell the news side. So I said, you know what? Let's not be greedy. Let's just make sure I trim it, and if it does have a really positive reaction, I can buy back in the next day and buy in higher. I have no problem with that. But I was being on the safe side, being on the conservative side, being on, in my opinion, the smart side. Okay. And in this case, it paid off because it's been down a huge percentage. I mean, put it this way, we would have lost 30, I think 35,000 back in the time frame. I mean, I can do the math exactly. I can pull it up. I might as well. Let's pull up the calculator. Let's see how bad it would have been. Okay, hang on a minute. So, let's see what we have. First of all, we got to figure out where it was. 444. 444. Okay, that's where we sold off. What if I didn't? Okay, minus, we are at 368 right now. 368. Okay, which is $76 a share. We were running 512 shares. So multiply that times 512 shares, 38,900. Wow, that's even more brutal than I thought. So we would have lost back 39,000 back in the last, let's see, essentially 1, 2, 3, 4 days, or 3 days essentially. That's a lot to lose in 3 days. Okay, I don't like doing that. And as a day trader and as a trader in general, I don't like doing that. I would rather take take that risk out if possible. And we don't know even if it's going to bounce the 50 right here. And that's assuming that it's going to bounce the 50 and come back up, which I don't know if it is or isn't. That's not what I do. I don't try to predict what it's doing. I try to react as quickly to what it's doing, if that makes sense. I don't try to predict what it's doing. I try to react as fast as I can. A lot of people will not pull the trigger fast enough on things and be like, well, yeah, you should have warned me yesterday or told me, before. And it's like, I wish I could, but I react, quickly, and I can't just post videos all the time about when I get in and out all the time as a trader per se. You see what I'm saying? So I'm in and out all the time. I add 200 shares, 200 shares, 100 shares, and then sell a couple and trim. And I do so much with the activity that I can't not, for sure, be on top of that. I try to post things on my community. So if you want to see when we make major buys or sells, subscribe to the channel and go to the community page. And you will see when I post something, I'm posting it for a reason, that it's actually important. I'm making a big decision on Tesla. So if you follow Tesla and you're a trader or you're an investor, this is a good channel to watch specifically because I follow Tesla every single day. Okay, I track the stock, I track the price, I track the movement, all the events every day since, I don't know, it's been over a year. So I have a lot of knowledge about what Tesla's been doing. So anyway, let's go back to the buy the hype, sell the news. Now, so we know we had one here. What happened? Buy the hype, and it sold off the news. The split, massive hype into the split. After the split, it didn't just go straight up. No, it sold the news all the way back. And I actually got caught in that. I didn't think that that was going to be a sell the news scenario. So it's not like I'm like perfect in what I do all the time. And usually I'm good about not catching those falls, and not getting hit in the slams. And then let's go back even further. We're ramping into earnings and sell the news again for 10 days later. And then Elon announced something huge. Oh, the stock split. He announced this. Oh, okay, we're splitting the stock. Wham. Okay, so buy the hype, the stock split, sell the news. Okay, followed by the hype running into earnings, sell the news after the earnings. Oh, let's go into here. Oh, buy the hype running into earnings, sell the news a little bit. And actually kind of went sideways there for a while. So it wasn't a huge sell-off. And this is actually, I believe, when Elon said, hey, the stock price is too high. It was at like 800 or something, 750. It's too high. He sold the news. He literally made everybody sell it. It was crazy. He's like, oh, the stock is too high in my opinion. That's a sell the news right there. He literally sold the news. He didn't sell his shares, but and then we had the actual start of, the market going down. So also factor in that the market will drag the stock down or pull it up. I mean, the market, if the market hadn't been going up in this entire time, Tesla wouldn't be going up here, by the way, guys. Tesla's not going to go up and just defy the market. That's just not how it works. If the S&P is coming down, or QQQ tech stocks are coming down, Tesla's coming down. It's that simple. Now, what's also happening up here? A lot of the tech stocks, Apple and some other stocks are also. Oh, look at the buy the hype, sell the news on Apple. The big Apple release where they released, oh my God, a whopping new upgrade to a watch and a tablet. Wow, you're right. That's amazing announcements. Oh my God, Apple to the moon, right? But a lot of people are buying a lot of options and 115s, 120s, and it's like, yikes. I don't understand. They even said they weren't gonna announce the 5G phone. So, and I followed, and the reason I'm talking Apple is because I used to day trade Apple. So I know a lot about Apple and the company. And, I knew the iPhone was gonna change the world, and I was all over that. But anyway, that's beside the point. So I hope you guys understand the buy the hype, sell the news. Okay? I'm not saying to buy the hype at the end periods of the hype in the last couple days. That's kind of suicidal. If you're buying it in the last couple days before, you've waited too long. Okay, you should be in a couple weeks ahead. You can see it's about a couple weeks. Okay, a couple weeks here. 2 to 3 weeks is a normal hype cycle. Look at that. 2 to 3 weeks. Look at those hype cycles. 2 to 3 weeks, each. And this one was about a week and a half. Almost 2 weeks. Let's see. 1, 2, 3, 4, 6, 7, 8, 9, 10. Oh, okay. Well, 2 weeks. 10 trading days. Buy the hype. I mean, this happened to be about a little bit more trading days, but so I hope you guys understand that. Now, here's the key levels. So moving forward. So what do I think? Where do I think we're going? Well, if the market continues to sell off, Tesla will continue to sell off and break the 50 and come down. Okay, I'm not saying that the market's not going to bounce back or not. I think a big catalyst would be the stimulus. Okay, if the stimulus keeps dragging, I'm pretty sure we're going to crack the 50 and come down to the 100-day, maybe on Tesla or another support. So let me do that actually, because we have major supports coming up. Okay, we basically are already on this support. See that? We're on the previous top. Okay, previous top on the 13th. Okay, over here in July. So we're already there. So if we crack that previous top, we're looking at about 330, about 337-ish, and if we basically lose 337, I think we could potentially be in around, that makes sense, around 300, 310, that range. I mean, there's a lot of support in here. Look at all that support up in that zone. So that's going to be a big support. And that's also right near the 100. So the 100-day moving average. So we do have a lot of support. So if you're stuck in the stock, let's say, for example, at 500, let me get rid of that really quick. Yeah, if you're stuck in the stock and you bought it right at the split, okay, which is a mistake, obviously, but let's say you did make a mistake. Well, how not to compound that mistake? Okay, so if you're in for 514 and you think, well, okay, if it does come down to those levels around 300, okay, 514, 300, if you're buying in more, it just depends. So this is tricky, okay, because it depends on if you have capital reserves to deploy more, or if you're just stuck with your entire, egg on that position. So I almost always keep 50K on the side to deploy, okay, which is about 20%. So I keep usually, it fluctuates, from 95% cash, which we're at now, to 95% stocks. But for the most part, as a whole, I try to balance to have funds to deploy for good situations. Luckily we had funds to deploy on the split trap where I was trapped in the split. I had funds to deploy, so I just bought more shares at 350 and ran it up. and then sold it off and was ahead. We're near all-time highs on our portfolio. So, and that's what I'm just trying to do all the time. I'm just trying to stay near those all-time highs as much as possible and continue ramping that up. So, but anyway, so I'm looking for an opportunity to buy back in. So I might day trade, okay, at the 365 level at this 50-day bounce in case we get a bounce or a dead cat bounce or a reversal, okay? So if we do, then I might try to, make 1,000 or 1,500 or 2,000 or whatever on a bounce, potentially. I mean, it depends on what the market does today, Thursday, Friday, and Monday. So if we bounce up to the 20-day and reject, I want to catch the bounce to the reject, potentially. So that's what I would do. So I'm not sure we're buying. I might just sit on the sidelines and not try to play hero here, because this is a tough spot to trade. So as a trader, I understand this is tough. Like, I don't have any clear direction of what we're going to do. So if I jump in and think it's going to bounce and then it decides not to bounce and it happens to go straight through the 50 or just reject, just pierce the 50 and reject, then I'm kind of stuck. So I'm not sure it's, once again, I don't care what it does. I don't care if it goes up or down. I'm just trying to make the best moves in understanding which way, where to go when it does break up or down. Okay, so right now I'm on the sidelines waiting, being super patient. And my mindset is I don't advise people what to buy or sell. I'm advising myself. Okay, this is what I do in this situation is I am very cautious in this situation. I am not running to buy or sell anything. I'm not rushing, to buy or sell anything right now. Okay, when I do buy, I buy Tesla, okay? Because long-term trend is valid, above the 200, above the 100, above the 50. Long-term, mid-term trends are valid still right now, okay? Now, it's not like the company's down below its 200-day moving average and falling apart, okay? I wouldn't be in the stock at all. Anywhere 5 to 10% under the 200-day, I would never be in that situation. I wouldn't be investing in that company. This company has been on the move and above these averages, more buying than selling averages for a long time now. Okay. People are understanding the company now. They're getting it, So anyway, that's the situation. So it's not like I can say, oh, okay, we're going up. We're going up on Thursday and Friday. What if the market pulls us down Thursday and Friday? Okay, the market could easily pull down. Tesla's already starting at $12 down, 368. So 368 is right there. Yeah, it's literally touching it. So you would think, in retrospect, if I go back to the 50s, well, we didn't really have a bounce on the 50 here. Okay, so I mean, the last bounce on the 50 was just right here. So this is a bounce and it went up. I mean, is it going to bounce and go up? I can't tell you, but what's the catalyst for it? What's a catalyst? Like what's fuel for the fire that's going to move it up? Okay, think about it that way. What's the fuel for the fire on Tesla that will move it up? I mean, maybe they launched the network or ride-sharing network or, oh, that's right, we have earnings coming up in a month. Maybe it runs up into earnings. So I'm definitely looking at some sort of bounce into earnings, okay, because I think they're going to hit good numbers, even if Elon's tweets are saying, kind of like, oh, we're going to have to haul ass if we're going to break our record. And he's talking about their total record, like the 112 deliveries. So if they, hustle, they're going to break that. But anyway, that's what I see for Tesla. I'm going to leave it at that. I didn't want to go crazy with that. I hope those moving averages make you understand that your timeline is important. Understand what your time is. I mean, are you a day trader? Then maybe you shouldn't be trading in and out right on the 200-day. I mean, you're not going to make any money. If you're a long-term trader, short-term trader, or a mid-term trader, you should be trading those mid-term moving averages. Short-term trader, short-term averages. Long-term investor, long-term averages. You see that thing bounce that 200, there's your opportunity to buy for the next 2 or 3 years. Okay, you'll be ahead. Right now, if you would have bought down at 75 and Tesla's at 368, I'm pretty sure you're not going to care. Okay, as a long-term investor. Like I said, I'm a long-term investor. I will be investing in Tesla for the next 10 years. Now I'm looking at probably 20, you know. So, but I mean, it doesn't mean I can't trade and not take the hits every time it takes a dive. Okay? I don't like taking dives. I don't like getting hit in the market. I do my best to avoid those spots. I can always buy back in whenever. So it also depends on the tax implications. So, if you can't sell because of taxes and you're just a long-term investor, then that also is that's a big difference too. That's up to you. I'm a trader, so I would rather pay taxes every single year and miss out on, 38,000. My tax implications, or the tax implications in general, shouldn't be 40,000. I saved that in 4 days. I saved the entire tax implications of, making whatever it was, 150 plus thousand in a year. I'm saving that tax implication in 4 days. So I don't look at people that are like, oh, what about taxes? Well, it depends on the state you're living in. It depends on a lot of, your time horizons on that. So I definitely wanted to pinpoint that, because I've had a lot of people comment about, why would you sell off? Then you're going to have to pay the capital gains tax and all that. Well, that's who I am as a trader and an investor. Okay. So I don't worry about that as much. And in Florida, we do not have that state tax that hits you even harder. So that does matter. So it depends. There's so many variables on what you're doing. So anyway, I hope you guys like this video, and I hope it makes you understand Tesla, and it should, let you kind of core your positions on what your timelines are. So anyhow, have a great day. We are at Thursday, 5:22 in the morning. So I'm up doing research, as always, early in the morning and Eastern Standard Time. And anyway, be sure to subscribe if you are an investor or a trader in Tesla. Okay? If you do either of these, or even swing trading Tesla, subscribe to this channel and watch the Tesla videos. You can watch past Tesla videos of what happened during different hits, and how we avoided some, and some that we got caught in, and what I did in those situations. So if you think anybody else is more experienced of a trader on Tesla, please do me a favor, shoot me their information so I can watch their channel, okay, and pick up some more little tips on it. All right, thanks a lot. Take care.